Okay, good evening, good morning, good afternoon, wherever you're tuning in from. You're welcome to this week's Forex Outlook with Great White FX for the 29th January to 2nd of February 2024. So we're going to start off with the economic calendar. Looking at the economic calendar, Tuesday has high impact news for the dollar. Wednesday for the Aussie. Also Wednesday afternoon. Then later in the evening, we're going to have FOMC, which is going to be a major event. Then we have rate news on the pound on Thursday. You also have news on the dollar index on Thursday. Then another major impact news as a non-farm payroll and unemployment change. These are high impact news for the dollar index going into the next week. So next week is going to be very interesting. So with that out of the way, let's go into our pairs. We're going to start off with the US 100, which is empty false variation of NASDAQ. So looking at this on the weekly, this is bullish. Why? It's making new highs. On the weekly, it's bullish. If you look at this on the daily, we can see we're having a bit of a rejection, which indicates a pause in the upward movement on the daily. Doesn't mean it's reversed, because for this to reverse, price has to take out this low first and this low. So with that, we go to the 4-hour time frame, which is for an intraday trader. That should be your bias, where you pick up your bias. Looking at this on the 4-hour, price made this low, but didn't make a new high, and it made a lower low. So looking into this week, what will tell you that you have a high here will be a close below 17285.4. So how do you expect it to play out? If I pull back my annotations, and this level here is the previous week's low. So two things that might play out. Let me drop to the 1 hour. If I drop to the 1 hour, we might. Hello, can you guys still hear me? Hello.
Yes,
Okay.
very clear.
Okay, so if we drop down to the 1 hour, we can basically see that we have a change of character here on the 1 hour. So looking at this, the 1 hour is telling us that there is move lower in price. If price closes below 17,352 with a body close, you wait for something like this, because this is US 100. It can be very volatile. You wait for something like this and they move down. But if price spikes this low and fails to close below it, then you're going to see something like this. But for the time being, the US 100 is pointing, is showing weakness. As you can basically see, if I do this, you can basically see price is now tilting to the downside on the 1 hour. So still bullish, but we might see a bit of a retracement before a continuation to the upside going into the new week on the US 100. The next one we're going to be looking at is the dollar index. And as you know, we have high impact news coming in for the dollar index on Wednesday and Friday. So we need to be pretty much aware of that. If you look at the dollar index from the weekly, this is a retracement of the break above 105.88. If you look at the dollar index on the weekly, because if you look at it clearly, although it had wicks, but there was a body close above here. Wasn't that convincing enough? But the retracement is steep. It did a very steep retracement, came down to this daily, weekly fair value gap, and it's back up. Now, where price is on the weekly is this bearish order block on the weekly. That's where price is now. If we go into the daily time frame, we can see that that weekly order block, if you come into the daily, that's where price is within. And we have this daily fair value gap here that price has not closed above convincingly. Has not closed above convincingly. But like I pointed out last week, This range candle is still standing. Let me hide all. This range candle, if you notice, there has been no close back below. The high of this candle is 103.10. There has been no close above the high back inside the range of this candle. So that means that going into this week, there's a possibility this may have gone for this high. Why do I say that? Let me hide my indicators. This range candle, this is a range candle, or what some people call a master candle. Why is it that you have, remember this is a daily time frame. Once you have a candle that has 5 or more bodies within its range, it qualifies as a range candle. So if we look at this, we have 1, 2, 3, 4, 5, 6 before there was a break to the upside. And most times when you have these breakouts, if it's not impulsive, you're going to have a retracement and a continuation. And the projection for the range candle most times is like this. You extend the entire range of the candle to the top side. So you now see why I say, and if you notice, half of the range is where price is having a little bit of an issue. If you observe where price is, oh no, this was not my intention. If you observe where price is failing to close above the midpoint of this entire range projection. So it might retrace a bit and might still run up to this high. So looking at the dollar index going into the new week, the possibility exists that we may see something like this. Let me go down to the 4-hour time frame. We may see, if you look at it on the 4-hour, it's basically in a consolidation, no direction. So we might see something like this and then a move higher. That's what I anticipate, that this is where price might most likely be trying to gun for on the dollar index. Because if that happens on the dollar index, then if it goes above here with a body close, then that will signal the continuation, the end of this retracement on the weekly and the continuation of the upside. So that's what we're looking at on the dollar index. So on the dollar index, it's still slightly tilted to the upside, but we might see a bit of a retracement to the downside. Probably, maybe price may try to come into this gap here, fill it, and then sweep the upside. So looking at the next chart, we're going to be looking at the Euro USD. So the Euro USD is basically inverse of the dollar index. So if we look at the Euro USD from the weekly, if we have a bullish Euro US dollar index on the weekly, we're going to have a bearish Euro USD on the weekly. As you can see, this is the impulse that broke this low and this low. This is the retracement. So if we look at it now, price is slightly tilting downwards. Let me hide my drawings. You can see it. This is like the retracement. So if we go down to the daily time frame, you can see price is tilting down, but at this daily fair value gap here. On the daily, you can see we have a break above 1.1017, and this is the retracement to the downside. So if we go down to the 4-hour time frame, you can see price is not, the retracement down is not very smooth. It's not very smooth, but I have a feeling it might still move lower. So if the dollar index is to drop, like I said, if it's to drop, this might rally into this point. If it gets rejected, then it's going to come for this low. As you can basically see, price is in a downtrend. So if this is to continue bullish, you need to see something like this. You need to see a move up, maybe spike here, change of character above the high that was used to break the low. Then we then have a move to the upside. But if that does not happen, this will most likely continue to the downside. So the next way we're going to be looking at is GBPUSD. Looking at GBPUSD, GBPUSD also on the weekly, it's in a range. Can see it doesn't deal with the GBP. It doesn't have a master candle or a range candle. Why? Because if you look at this bullish candle here, price has gone outside its high. So this candle does not qualify as a range candle. Doesn't qualify as a range candle because for it to be a range candle, the highs and the low must not be breached by price. So it's in a consolidation, as you can see, weeks to the upside, weeks to the downside, a very ugly price movement. So if we go into the daily, and I pull back my indicators, and not my drawings, my indicators. High drawings. We can basically see what price is at this structure point here, and it's in a consolidation. It's in a consolidation. So what would tell us that this might continue to the downside is a move below 1.2596. What do I mean? If you have something like this, full body close below this point, then you wait for a retracement and they move lower. But for this pair, it's in a range. So you just have to be careful. So when price is at a range, what you'll be playing for is the top side and the downside. So for this does not have a clear-cut range for now. It does not have a clear-cut range for now. As you can see, if I remove the candles, you can see basically price is just meandering. But with a slightly tilted move to the upside, as you can see, this impulse broke 1.2725. So after this break, we're having a sideways consolidation. And if you notice, there is a fair value gap. On the 4-hour time frame, there is a fair value gap that has not been fully mitigated. So if this rallies to the top side, then it's going to come down here. But if it drops first, it might fill up this, then continue to the upside. That depends on what the dollar index does with the news on Wednesday, which is FOMC, and the non-farm payroll on Friday. So the next one we're going to be looking at is gold. Gold is slightly tilting to the downside. If we look at gold on the weekly, although it looked bullish, but it did not close above 2067 with conviction. And if you notice, price has been moving slightly to the downside, but not with enough momentum. If we go to the daily time frame, it's still tilted to the upside. Well, it didn't make a new high. So since this low did not break, since 1973.09 did not break 2149, the possibility exists that this may go for 1973. But that depends on some variables. Let's look at the 4-hour time frame. As you can see, it's tilting to the downside on the 4-hour. As you can see. So this, any rally on this, we have what looks like equal highs here. 2039, 2037. So the possibility exists that price may sweep this high into this 4-hour fair value gap and come into fill here, going into the new week. But you just need to wait and see, because if we look at this on the 1 hour, we're still tilted slightly to the downside. So for gold, any rally on it might be an opportunity for a short. It's not yet bullish. The next one we're going to be looking at is Euro Pound. For those who trade Euro USD and GBP USD, it's important that you always check the directional bias of Euro GBP before trying to trade those pairs. As you know, we have high impact news for the pound on Thursday, so that will greatly influence this pair going into the new week, which will determine the strength of the British pound and the euro against maybe something like the dollar index, euro AUD, GBP AUD, euro yen, pound yen, and all those other crosses. This is still bearish. This pair is still bearish. I believe it may be trying to sweep 84.29. There has been an impulse to the downside. There has been a retracement. It's singing above this low here. If we go into the daily time frame, you can see it has closed below this. So going into this new week, let's drop to the 4-hour time frame. We might see a bit of a retracement. As long as price stays below 85.93, you're going to see price come for 84.92 and any other price lower. So for this pair, wait for a retracement, maybe a sweep of these highs, then a continuation to the downside. And if that should happen, that would mean pound strength and euro weakness. So let's be aware of that. The next pair we're going to be looking at is pound yen. This pair is still bullish. This pair is still bullish. Let's look at it from the daily. It's still bullish, but it's in a consolidation. Last week, it didn't close above 188.69. Is a rejection. If we go into the daily time frame, you can see there's a rejection below 188.66. But if you look closely at where price is sitting above a bullish fair value gap on the daily time frame. So that means there's a possibility it may still push higher. If we go into the 4-hour time frame, we can see it's just a consolidation. So for this pair, the key level is 184.48. As long as this level is not breached, this will still move higher. So that's it for the pound yen. This is still bullish, but it's in a consolidation for now. Below a significant high. Last but not the least, the euro yen. Looking at the euro yen, now do you see the difference when I was saying you should know the strength of pairs? You see the way pound is on its 4-hour, euro yen is on its 4-hour. Look at how pound, it's the same currency, but different strength. You see the way pound was consolidating in a sideways range. Now look at euro yen. The euro yen was in a downward move. So that was why I said, if you like, you check when we looked at the euro pound was bearish. So that was what weakened this pair and gave strength to pound yen. So we need to be aware of that. This pair is still bullish as long as it stays above 158.54. This is a retracement. Buy the lows, sell the highs until you get a break body close above the high. Then you know that the up move is going to continue for this fair value gap, this high, and probably 164.30. So do I have any questions, or is there anybody who want me to look at before we call it the night? Hello, can you guys all hear me? Any question or anybody who want me to look at before we call it the night? Okay, so hello, Mr. Ayo, do you have a question?
Hello.
Yes.
Not at all, Coach. Thank you very much. Thank you very much.
Okay. Madam Halima, do you have a question?
No question. Thank you.
Okay, so I wish everybody, thank you for taking your time to attend. I wish everybody a beautiful night's sleep, a blessed and wonderful trading week ahead. Don't forget the high impact news going into the new week. Trade with caution. Good night, everybody.